Hello, welcome back. So here we post general entries within the T accounts or the general ledgers. So here we create our first T account is cash account. We call it T account because its shape is just like T account. Here we always mention debit balance and here credit. So here the cash account gets debit, and the reason behind getting debit is capital account, and capital account with an amount 400,000. So the same entry has credit effect as well. So how this entry affect the credit account? The capital account basically it gets credited, and the reason was cash behind the credit. So here we will mention cash account with amount 400,000. So this was the effect of the first entry on the capital account and the cash account. Now we will make our third account here. We write a similar debit balance and the credit balance. Here we talked about goods. So the goods account here we will mention goods account. We already did debit and credit balance. So good account gets debit, and the reason behind getting debit is cash. Cash account with an amount 20,000 rupees, and another reason is creditor Ali account with an amount 20,000 rupees. So in order to show the credit effect of that entry, how it affects the cash account and creditor account, the cash account gets credited, and the reason is goods with amount 20,000 rupees. So here we write goods account with amount 20,000 rupees. Now for the second effect here, we will create another account, creditor Ali account. Here we write debit balance and creditor balance. So here the creditor Ali account gets credit with an amount 20,000 rupees, and the reason is goods. So creditor Ali account gets credit, the reason was goods account with an amount 20,000 rupees. Now if we go back towards the first transaction is done, the second is done, and now we go to the third transaction. Here we will create another account of rent expense, and the second account what effect goes to is cash account. So here we create rent expense account. Here we write debit balance, here we write credit balance. So the rent expense account gets debit with amount, with the reason is cash account with an amount 3,000 rupees. The second effect of the third transaction was on the cash account. The cash account gets credited here with the reason is rent expense, because we paid rent expense of amount 3,000 rupees. So the cash account gets credited. Now we will create another account with the name of office supplies account. So here we will create another account, office supplies. We'll write debit balance here and goes credit balance here. So office supplies account mentioned here gets debit, and the reason is cash. So because we have paid cash against office supplies, count with amount 3000 rupees. So its credit effect goes in the cash account. The cash account gets credited with paying off office supplies with an amount 3000 rupees again. Now if we move towards the fifth transaction of the day, here we received cash against sales. So cash account gets debit, and the reason is sale account with an amount 30,000 rupees. And here if we create a sales account, we mention here debit balance, then credit balance, and the sale account gets credited, and the reason is cash, because we received cash against sales with an amount 30,000 rupees. So now we go to the sixth transaction. Here we paid wages and against the work labor has done, so our cash account gets reduced, and we create here new account, wage expense account. We write debit balance here, write credit balance here, and we paid cash, and the cash is the reason of getting debit of the wage expense account with an amount 10,000 rupees. So here the cash account gets credited, and that because we paid cash against wage expense account with an amount 10,000 rupees. Now if we move towards the seventh transaction, here we carry out drawings. So for every account it should be separated, like for every transaction, separate transaction, there should be separate account, like for drawing expense, and cash should have same account in all the transactions. So here we write debit and the credit. Drawing expense account gets debited, the reason is cash account with amount 4,000 rupees, and here we have to credit the cash account because we carry out drawing expense with an amount 4,000 rupees. And today's last transaction we will mention out here. We'll make a small account here because we don't need that much space. So here is a bank account. The bank account gets debit, and the reason is cash, okay, with an amount 20,000 rupees. And here for the credit effect, the cash account gets credited because we paid cash to put in the bank. So the cash account gets credited with the reason of bank account with an amount 10,000 rupees. Here we have clearly posted all the transactions within the ledgers. Now we will carry out closing. So before closing, we will show you all the account details here. These are all accounts. So we'll start closing from right from the end. You can start closing from anywhere. So here the cash account 4,000. In order to balance, we carry out balance the amount 4,000 rupees. 4,000, basically whichever is the highest balance comes here. Highest balance you have to mention at the bottom on both sides, and for making them balance, you have to add the difference whichever side it comes. Basically this 4,000 was the highest balance, we write here, and there was a difference, and we put the difference in the carry down balance. Here the highest balance is 10,000 rupees, so we write 10,000 here, and there is no balance 0, so the carry down balance we will write 10,000 here. In sales account, the highest balance is 30,000 rupees, we write 30,000 here, 30,000 here. So the carried down balance is 30,000 on the debit side. For office supplies, 3,000 comes down, which is the highest balance on both sides, and on the credit side we have to carry out 3,000 carried down balance. So here now it turns to the bank account. For closing bank account we need to write 20,000 on both sides, and the carried down balance is 20,000. Here we will close rent expense account. Highest balance is 3,000 rupees, and on the credit side there is no balance, so we'll write 3,000 in order to balance the account. On the creditor Ali account, the highest balance is 20,000, so we'll mention here 20,000, and the debit side has no balance, so we'll write here 20,000 rupees in order to balance the account. So here the three accounts are still left. The goods account has the balance 20 and 20, 40,000 on the debit side, so highest balance is 40,000, and the difference is on the credit side is 40,000. Now this account is totally balanced. Now on the capital account there is a balance on the credit side, which is the highest balance with 400,000, and there is a 400,000. So there is a carry down balance on the debit side with 400,000. This account is even balanced. Now for this account we need a calculator to identify that which side balance is the highest balance. So we will carry out calculation here. 4,30,000 on the debit side, but on credit side there's a 20,000, 23,000, 26,000, 36,000, 40,000 and 50,000. So the highest balance is on this side, 4,30,000. On this side 4,30,000. Now in order to make this balance 4,30,000, we have to calculate this balance and we'll subtract it from 430,000, and then we add this amount there. So 20,000, 23,000, 26,000, 36,000, 40,000, 50,000. So if we write here 50,000 and we subtract it from 430,000, it will be 380,000. So here we will write carry down balance as 380,000. Now here are all the accounts are closed.